From time immemorial, there has been a wide range of Ponzi schemes rising every now and then. If you have stayed long and current in the investment space, you would have been familiar with a few of them. To start with, Ponzi schemes are seemingly too good to be true investment opportunities that offers people high returns with little or no risks. In fact, it is not uncommon to see Ponzi schemes disguised as real estate investment projects that later fade away. The purpose of this video is to share a few tips on how you can identify a Ponzi scheme, so when next you come across one that fits this description, you can stay away. First, there is a promise of high financial returns with little or no risk. Guys, one founding rule in the world of investment is that risk is positively correlated with returns. Meaning the higher the risk, the higher the returns, and vice versa. So, if someone is promising you a high return with no risk at all, that's a red flag. Also, another feature of Ponzi schemes is that they are always signing up new members. Of course, this isn't far-fetched because the system basically relies on the new members' investments to pay the old members. Usually, the schemes usually crash when there is no sufficient fund from new members to keep the system afloat. That is why these schemes are usually big on recruiting new members. So, if your investment club or scheme offers too good to be true offers for new members or are always desperate about recruiting, stay guided. It's likely Ponzi. Another way to recognize Ponzi schemes is that there is the lack of proper and identifiable underlying assets. If you cannot explain your investments to a 5-year-old in a way that he understands and can explain to another 5-year-old, then bro, sis, beware. Ponzi schemes would usually hide under the guise of so many investments such as forex trading, crypto trading, and even real estate. But there is always one flaw with all the guises. They lack proper identification and verification. The last way to identify a Ponzi scheme is the fact that there is usually a consistent income stream no matter the underlying market conditions. Normally, the returns on investment should vary depending on the overall market conditions. So if your investment club or fund keeps paying you a consistent interest or profit, as the case may be, not minding whether the market conditions are favorable or not, watch out. It may be a Ponzi scheme. With these few tips, I'm sure you have learned how to identify and avoid Ponzi schemes.